Welcome to The Deep Dive, your shortcut to understanding the pulse of the market. Today, we're taking a close look at A10 Networks' Q2 2025 earnings call. That happened August 5th, right after the market closed. Our mission, really just to unpack the critical figures, the strategic shifts, and what management's outlook truly signifies for the cybersecurity landscape. We want to give you a comprehensive understanding of A10's performance and its future trajectory.
Exactly. We're looking beyond just the headlines, trying to give you the context, the implications that actually matter. A10 Networks, they've been navigating a pretty dynamic market, so understanding their latest quarter is really key to seeing where they're headed, especially with AI becoming so influential.
Okay, so let's dive right into the headline numbers. Q2 2025 for A10. They reported non-GAAP EPS of $0.21. That actually beat the consensus estimate of $0.20, just by a penny, but still a beat.
A beat's a beat.
Right. And revenue came in strong, $69.4 million. That's a robust 15% year-over-year increase. And what's really noteworthy here, it wasn't just a slight beat on revenue, it was significantly above expectations. About $3.0 or $3.2 million more than analysts projected.
Yeah, that 15% year-over-year growth, that's a clear signal, a really strong signal. And on profitability, well, they kept up those impressive margins. Non-GAAP gross margin was 80.0%, right in line with their long-term goals, that 80 to 82% range.
Pretty solid.
Very solid. Adjusted EBITDA was $19.7 million. That gives you a healthy 28.3% margin. And they're actively returning capital too. $4.3 million in dividends paid out, $3.9 million in share repurchases done. They even declared a new $1.06 dividend. So it isn't just about growth. It's efficient, profitable growth and a clear commitment to shareholder value.
Now, what's interesting is how the market first reacted. On the call day, the stock wobbled a bit, dipped about 2%, maybe a little more, right after the close.
Yeah, you often see that knee-jerk reaction.
Yeah, exactly. But this one, it was reevaluated pretty quickly. By the very next trading day, the stock had completely turned around, climbed over 5%. And importantly, on much higher volume, like 1.75 million shares versus an average of maybe 0.8 million.
Right.
So it really seems like the market just took a beat, digested the whole story, and then rewarded the clear beats and the strong underlying narrative they presented. Suggests a more thoughtful response maybe than just pure emotion.
It absolutely does.
Yeah.
That delayed but decisive positive reaction, that's a powerful indicator. Investors aren't just looking at the numbers right now. They're kind of buying into the strategy, the long-term potential, and expanding on those numbers. That Q2 revenue growth, 15% year over year, really a standout. It benefited from a more normalized service provider quarter compared to last year anyway. Plus those strategic investments they've been making both in enterprise and this burgeoning AI infrastructure market, that really pushed them forward.
Can you break down the revenue streams, product versus service?
Sure. Product revenue was $39.2 million. That's about 56% of the total. Services revenue was $30.2 million, so the other 44%. And what's particularly good for future predictability and stability, total deferred revenue increased up to $144.4 million. And their eligible contract renewal rates still above 90%. That indicates really strong customer retention, continued product uptake. People are sticking with them.
And the balance sheet, you mentioned flexibility earlier. How strong is it?
Whoa, very strong. It paints a picture of significant strength, gives them a lot of options. A10 ended the quarter with a substantial $367.4 million. That's in cash equivalents, and marketable securities.
Wow, that's a big number.
It is. It's a huge increase from the $195.6 million they had at the end of 2024. Now, this boost was mainly thanks to that $225 million convertible debt offering they did back in March. It's due in 2030, pretty attractive 2.75% coupon too.
So that financial flexibility, that's key, right? Supports organic investment, maybe M&A.
It's crucial. It supports R&D, sales investments internally, but it also positions them really well for potential strategic M&A. Bolt-ons, tuck-ins, they basically arm themselves for growth both inside and out.
Makes sense, like a war chest.
Indeed, allows them to be proactive, not reactive. And their capital allocation strategy, it's still active. They have $71.1 million left on their share repurchase authorization. That was a $75 million program initially. So that signals continued confidence in their cash generation and, their commitment to boosting shareholder returns.
The bottom line, the net income.
Right. Non-GAAP net income was $15.5 million. That's 0.21 cents per diluted share. That's a healthy bump up from $13.2 million or 0.10 cents per share a year ago. So it really showcases that continued operating leverage, basically getting more profit from each dollar of revenue, even while they're investing pretty aggressively in these new high growth areas. And just for context, GAAP net income also increased. It hit $10.5 million, or more cents per share.
Okay, here's where I think gets really interesting. Let's talk strategy, particularly AI. Management highlighted strong tailwinds from these massive AI data center buildouts. They specifically mentioned significant wins in these AI environments, including that previously disclosed deal with a global cloud leader, Microsoft, to protect critical AI infrastructure.
Right.
This sounds like more than just generic cybersecurity. It feels like a very specific high-stakes validation. What makes A10 uniquely suited for this AI work?
That's a crucial question because let's face it, a lot of companies are claiming to be AI aligned these days. What really validates A10's relevance here, I think, is their unique ability to deliver high throughput, very low latency inspection, and robust DDoS and WAP features, all crucial in these demanding AI settings. Think of these AI data centers. It's like a city suddenly needing to power 1,000 new skyscrapers, right? The demand on the network is just immense.
That's a good analogy.
And A10 solutions, they're particularly attractive for these power-hungry AI applications because of their efficiency. Industry-leading efficiency.
Yeah.
So they're not just connecting these skyscrapers, they're doing it with the most energy-efficient cabling and power distribution possible. That's a huge ROI driver for clients like Microsoft. When you're dealing with the scale and intensity of AI, efficiency means real cost savings, real operational stability.
That efficiency piece, that really clicks. It's a powerful differentiator. And I want to clarify something you touched on earlier about AI revenue streams. You made a distinction, I think, between current revenue and future potential. Can you expand on that? Sounds like they're laying groundwork.
Absolutely. The key nuance, glad you brought it up. Right now, a big chunk of A10's AI-driven revenue comes from customers building new data centers, specifically for AI. So A10 is securing the infrastructure that supports AI. Think of it as selling the locks and alarms for the new buildings, housing the power for AI systems.
Okay, securing the building.
Exactly. But their early engagement in things like AI firewalls and predictive analytics, that suggests future direct revenue streams from new AI-powered security products themselves, products that might actually leverage AI within A10's own offerings. Smarter threat detection, maybe automated security responses, that kind of thing. These potential future revenues may be coming online in 2026, maybe later.
Yeah.
That represents A10 moving from securing AI infrastructure to actually securing with AI, a significant strategic evolution.
That's a vital clarification. Really highlights their forward thinking. And beyond AI, A10 seems pretty strategically diversified too, which has to be a strength in this kind of volatile market. They reported broad-based growth across geographies, verticals. It's notable that North American service provider spending is stabilizing, that's positive, and their enterprise pipeline is expanding.
Yes, both are good signs.
Looking at the trailing 12 months, total revenue grew 11% year over year. Enterprise up 8%, service provider up 14%. And their North American enterprise growth was actually higher than that 8% global number. They're targeting big enterprise clients, finance, gaming, tech, needing complex security and spur low latency. What does this broad diversification tell you about their market approach, their resilience?
It tells you they're smart. They're not putting all their eggs in one basket. It shows a robust, sort of multi-pronged growth strategy. The stabilization in North American service providers, crucial. That segment can be pretty cyclical. Seeing 14% growth there, trailing 12 months, suggests those customers are investing again in next-gen infrastructure, which A10 is well positioned for. Meanwhile, the enterprise growth, especially the faster pace in North America, indicates they're successfully landing high-value customers with really complex needs. These are companies where reliability, performance, it's absolutely critical. That's where A10's low-latency, high-throughput stuff really shines. It's really a testament to their sales execution and product fit across different demanding segments.
Speaking of products, the portfolio is evolving too. They're integrating something called ThreadX into their A10 Defend suite. A10 Defend already offers hybrid DDoS, threat intelligence, web app protection. So what's ThreadX? Why is integrating it so important now?
Right, ThreadX, it's a strong product focused specifically on API and web security. And its key characteristic is that it's easy to set up and run. That might sound simple, but it's actually a huge premium in the cybersecurity world.
Why is ease of setup such a big deal?
Well, historically, deploying robust web and API security. Notoriously complex, time-consuming, often needs specialized skills, tons of configuration. A10 achieves this ease, maybe through pre-configured templates, automation, stuff like that. It significantly cuts down the friction for businesses trying to secure their APIs quickly, lowers deployment costs, sure, but more importantly, it reduces the time to protection. And this integration is crucial because networks are getting more distributed, Apps rely heavily on APIs. Securing those points is just paramount. So ThreadX enhances A10 Defend, makes the whole suite even more compelling, especially for larger enterprises grappling with these complex, evolving architectures.
Okay, so considering all these pieces, the financial beats, AI tailwinds, diversification, product evolution, what's the takeaway for the future? How is management positioning the company?
Well, management's targeting high single-digit annual revenue growth. They call it a planning guardrail, consistent with a sort of normalized demand backdrop. What's interesting is their emphasis on durable demand and continued operating leverage suggests they think they can grow efficiently, even if things are uncertain. Now, this outlook is set against, continued macro uncertainties. But A10 believes their strategic spot, cybersecurity and AI spending, puts them right in front of two durable secular catalysts.
Secular meaning long-term trends.
Exactly. The CEO noted that tech spending is increasingly driven by these big trends, and A10 is making targeted investments globally, enhancing their position in both enterprise and service provider sectors. They're essentially betting on the long-term need for strong security and the explosive growth of AI.
So for you, the astute investor listening, what's truly fascinating here is how A10 seems to be effectively translating these big macro trends, AI, cybersecurity, into actual financial performance. It's not just talk. The solid beats, top and bottom line, those healthy 80% gross margins, it underscores consistent execution, strong operating discipline. This isn't a company just, riding a wave. They seem to be actively steering into it.
Yeah, I agree. And if you connect this to the bigger picture, A10's strategic story, it's clearly shifting from maybe cyclical stabilization, especially in SP, to more direct AI-aligned security growth. And the market's reaction post-earnings that move from the initial dip to significant rebound the next day, it suggests a constructive, bullish sentiment. It kind of implies the market is buying into this longer-term growth story, validating their strategy, the strength of Q2. It's a pretty strong signal of confidence from investors.
Absolutely. And looking ahead, there are definitely some key catalysts we should watch. First, converting that enterprise pipeline. Sales cycles can be long, but the days can be big.
Right, landing those deals is key.
Second, potential for more public AI data center customer logos beyond Microsoft. Another hyperscaler win would be huge validation.
Definitely one to watch.
Third, further normalization in North American service provider scaling. Continued stability there is important. And finally, just their ongoing cadence of dividends, share buybacks, demonstrating that commitment to shareholder returns. Plus, that $225 million convertible debt gives them flexibility for potential tuck-in M&A. Could accelerate things.
Acquisitions could definitely play a role.
Which raises a key question for me. How quickly can they really convert these strategic wins, these foundational AI engagements, into accelerated, direct AI-driven revenue growth? Moving beyond just securing the infrastructure builds, that feels like the ultimate test of their long-term AI strategy.
That's the billion-dollar question, isn't it? Execution from here is critical. All right, let's play a little game for a moment, just for fun. If I were pitching an outrageous but plausible trade idea, just based on this call, A10's current setup, I might suggest initiating a long position, but with a calendar put spread overlay.
Okay, a calendar put spread. Tell me more. Sounds a bit sophisticated.
It is, but let's break it down. The stock, as we said, clearly re-rated post-earnings. Confirms the A-security story, solid execution. Check. However, we do have that announced CFO transition coming up late September. Now, they framed it as continuity, but any leadership change could introduce some minor short-term uncertainty. Manageable, but there.
Okay, so there's a known event coming.
Exactly. So the trade have two parts. First, you sell a short-dated out-of-the-money put option, let's say October expiration, strike price just below where you think the stock will likely hold. Think of it like selling a very short-term insurance policy. You collect cash, the premium, for doing that.
All right, collecting premium.
Then, at the same time, you buy a longer-dated put option, maybe December or January expiration, and slightly further out of the money, so it's cheaper. This is like buying longer-term insurance for yourself.
Okay, so selling short-term insurance, buying longer-term insurance, you're betting on short-term stability, but protecting against a potential, maybe less likely, longer-term dip.
Precisely. Nailed it. The setup benefits from the expected stability, the positive sentiment holding up in the near term, as the market digests the CFO change as, no big deal, a continuity thing. It lets you capture that premium from the short put you sold, which lowers your overall cost. And crucially, it gives you a hedge, a prudent one, against any unexpected negative surprises, maybe broader market jitters that hit smaller tech names after that CFO change happens. So it's a kind of nuanced bet on strategic stability, on the market continuing to like the AI story, but managing that tail risk prudently. And of course, I have to say, this is purely for illustrative purposes, absolutely not financial advice.
Understood. A very interesting illustrative idea, though. Well, that was a thorough deep dive into A10 Networks Q2 2025 earnings, from the strong financial beats and impressive margins to that strategic alignment with AI data center growth and the robust capital returns. The company appears pretty well positioned.
Yeah, their dual focus, enterprise and service providers, plus the evolving product portfolio with ThreadX integrated. It suggests a strong foundation for future growth. And the market's constructive reevaluation post-earnings definitely reinforces a positive outlook, I'd say.
Indeed. And as you listening, continue your own research, your own analysis. Remember this. While the immediate numbers are compelling, A10 Networks' real story, perhaps, lies in its ability to translate the abstract power of AI and the essential need for cybersecurity into concrete, defensible competitive advantages. The big question remains, how effectively can they keep innovating and capturing market share in a landscape that's just evolving at breakneck speed?
It's really not just about what they've done, but how agile they can be in what's coming next. That's the key.
Remember, this deep dive is for informational purposes only. It is not financial advice. We always encourage you to continue your own research and analysis. Thank you for joining us on the Deep Dive, and we look forward to bringing you our next market deep dive.